As she pointed out, we are slap dab in the middle of earnings season, or actually at the start of it. Now, remember, this is the first full quarter where the president's of the Republican Congress's tax cuts went into effect. And we're going to see the impact of it. And to a company and a sector, all 11 sectors in the S&P 500 are expected to benefit appreciably. Earnings estimates now are that they will be 16 to 18% ahead of last year. In other words, they will be that improved over last year when, of course, taxes were much higher. Financials are expected to sort of lead the way, telegraph where the rest of the crop could go here. BlackRock, the big financial juggernaut, out with better than expected numbers that tips the hand for the like of Wells Fargo and Bank of America and Citigroup. All of them, of course, due out those latter earnings tomorrow. But then it begins in earnest when we move on to old staples like Aluminum Company of America and then 3M and Caterpillar, and then on to the technology sector later next week. But bottom line, it is going to be closely scrutinized because this is the backdrop that analysts like to point out is quite nice, thank you, no matter the fears of war, the fears of a trade war, and all the other issues bedeviling Washington right now, including Republicans bolting town and, well, investigations mounting in that town. To Market Watch's Larry Glazer and Richard Leone. Richard, what do you think of what wins out in this environment?
Neil, thanks for having me on. I think we're going to see a very strong earnings season, and I think this is going to shift the conversation away from headlines and back to fundamentals, which is exactly where we should be. As you said, earnings are expected to grow 16 to 18% year over year. We don't see valuation extremes right now. We're seeing stocks trade at 16 times forward earnings, and that's without backing cash out of balance sheets. Overall, I think this is going to be a very positive season and very positive for equities.
But on that point, just to follow up before I go to your colleague there, is it your sense that the earnings news, which really hasn't changed, that's been good for a while now, it's going to be on steroids now with these tax cuts, but that's going to have any different market reaction this go around because the worries persist. These stocks trade up or down based on the likelihood or not of a trade war with China or now just an outright war with Syria. What do you see winning out?
Yeah, Neil, we don't think there's going to be a trade war, and I think there's the possibility a lot of companies beat their earnings reports, which is going to move stocks higher. Look, the costs of a trade war are just too high for either side. We do think cooler heads are going to prevail on that point. We just can't afford it. Look, 2/3 of the U.S. economy is the consumer. Tariffs would function as a tax on the consumer, and anything that limits the consumer's purchasing power is not good for growth. So overall, I think equities will move higher. You know, there will be volatility as both sides try to posture for leverage here with respect to the trade war, but I am optimistic going forward.
All right. Larry, I don't want to hit you with news, or you, Richard, breaking news, but it kind of touches on what you just were talking about, Richard. Indications out of this meeting the president's having with some lawmakers that he is open to revisiting TPP, the Trans-Pacific Partnership, the one that would be a counter to China that we opted out of, largely most of the Asian nations versus China, and we would be part of that as sort of a counterweight to China's influence in the region. We are told right now the president looked at Larry Kudlow at this meeting and said, Larry, go get it done. Obviously, if that happens, I think the markets are always open to looking at trade pacts because they like trade pacts, I guess. And on this, on top of the news right now, Larry, that the president might be looking at revisiting a rework of NAFTA that could be acceptable and doable.
That's
what
right.
do you make of this?
You know, Neil, look, first, going back to the earnings conversation, I am so excited to see the impact of the legislative tax benefits on this quarter's earnings, which are going to be the strongest since 2011. With that said, you've got so many geopolitical considerations, Syria, China trade, all of these, none of which have had any negative economic impact to date. And that's why earnings growth expectations have actually been accelerating up 50% in a meaningful way since Jan 1. With that said, with this latest breaking news, I think it's important to recognize everyone's so focused on the negatives being a negative catalyst in this market. You've got the Kudlow effect here, a pro-growth, pro-business environment on top of the beneficial regulatory environment. Some of these trade packages could really open up markets and boost this free market policy. We get to the other side of the rainbow, as they call it. So I think that's the real excitement down the line. Once we get past the first quarter, which we know is going to be great, I think we look forward to some of these policies really kicking in. It could take a year for tax policy really to benefit this economy. And that's why I think for investors, they need to think holistically about this whole package and say some of the benefits of 2017 are going to carry over into 2018. The stock leadership may also change, but there's a lot of economic growth. Sure, repatriation's great, right? Tax reform's great. But what if we open up foreign markets and really boost exports, which is what the president's trying to do?
Well,
so I think
I'm
we
wondering,
need to focus on some of the positives that are not priced in here, not just the positives that are priced.
I beg you to stop. No, only because you're so smart. You left me in the dust minutes ago. But, Richard, I'm hearing that. I'm wondering if the president's bark is worse than his bite, or maybe this is a calculated move on his part to say, I'm not anti-trade. I'm anti-getting dumped on in trade, or whatever you want to characterize it as. But if he's open to revisiting the Trans-Pacific Partnership, if he is talking about cobbling together a deal that might be acceptable, a rework of NAFTA, which was a deal he abhorred, he is showing some flexibility here that I think is surprising many in the markets and might be a signal to China, hey, maybe we can make a deal here and everyone can walk away happy.
Yeah, Neil, I think that's exactly right. You know, if you look at this holistically, the United States has led the movement towards free trade for the last 75 years. This has resulted in global supply chain dynamics, which are just very difficult to unwind and to reverse at this point. So, as we've seen in the last couple of days, we have seen the rhetoric tone down with respect to a trade war and tariffs, and I think this is just a continuation of that.
Real quickly, gentlemen, and Richard, I do want to get your quick take. Facebook. Would you buy it after these 2 days of hearings and everything else? I mean, it looks like Zuckerberg came away unscathed, but would you buy Facebook now? First, Richard?
I think Facebook is attractively priced.
Wow. All right, Larry.
I think there are 495 stocks out there that didn't get their fair share last year. A handful of companies got all of investors' attentions. It's a broad economy. Tax benefits and regulations will benefit all of those other businesses. That's where the opportunity and that's where the value is outside of the FANG stocks.
So you don't like Facebook?
You know, I haven't been on Facebook since the scandal broke. Let me just say, full disclosure, I might take my picture down, Neil. I just want you to know that.
You know, Neil, Facebook does not have any competitors, and it certainly doesn't look like it's going anywhere anytime soon.
All right. Well, this Internet's going to be big, guys.
It's a great place to share a picture with your grandmother, I'll tell you that.
All right. Thank you. Thank you very, very much.